All right, I'm told he's there. Hi, Manish. Very good afternoon. Tamanna here, and thank you for joining us. I'm told from Zurich, where it's cool. Political temperatures high up here in India. All the excitement about the portfolios, etc. So since this is the buzz this afternoon, let's start with how you're seeing this continuity, stability in place, and do you think that sort of sets the pace for the country, economy, and markets?
Yes, thanks, Tamanna. It's unusual to be speaking from here, but I can just say that the people I've met over here, I've been in Europe for a while, are actually very, very enthused about what's going on in India, because Europe itself has been voting in very far-right parties, as you just saw what happened in France as well. So it's not unusual. What the press reports is actually very different from what the people on the ground and the investors here are feeling. And I think everyone here has just been waiting for an opportunity to get in to the Indian markets and to participate in the India story. At a personal level, of course, markets were expecting continuity. I think the seats came a bit lower than what the market expectation was. And we very quickly, I guess, have reconciled to the coalition. And there's a sigh of relief that the strongest ally is actually Chandrababu Naidu, who was the original CEO, CM of the country. And therefore very developmental oriented. And there's also a sense that both the main allies, Nitish and Chandrababu, are now sort of senior and almost towards the last 5 or 10 years of their, sort of careers, where they will actively be running things themselves. And therefore they may be looking more to do what they can for the states and leave their legacy behind, rather than, be doing a lot of bargaining of the sort we saw 15 years ago. So on balance, I think markets, as you've seen, have come back to even keel, as if nothing has occurred. And it comes back to actually what earnings are delivered by whichever companies are.
Having said that, Manish, and I take your point that markets have come back to even keel. Nevertheless, who is the next finance minister? Who's handling railways? Who's handling telecom, roads, highways? Does this matter? Does the 100-day agenda sort of set the tone, the next budget? Do these become big events for us in newsrooms or for the market as well?
Tamanna, to be honest, I think it's more in the newsrooms because, if someone had told us, that Mr. Jaitley will not be there as finance minister and then he will not be steering the way he had got everyone to have consensus together on GST, one would have felt there's a big setback. So, people, parties, leadership, countries, they transcend individual personalities, I think, over a period of time. And you've seen with this leadership of Mr. Modi that it's eventually his sort of vision which gets delivered. And I take you back even to the days of Narasimha Rao, when Manmohan Singh ji became the finance minister and he actually unleashed reform. But it was only because he had a prime minister like Narasimha Rao who was backing him that sort of thing could happen. Whereas in his own tenure, because he had a different coalition and different compulsions, he got very hampered in what he was able to deliver, despite probably knowing what needed to be done for the country. So I think it's a similar case here. I think the bureaucracy actually can implement whatever other decisions and vision put forward by the leadership. Obviously, each minister at his or her level will matter to accelerate, to get better reporting from the executive arm of the government. But as the PM has already put out, his 125-day program was more about speed of execution. And I loved the way he wrote his article about that we need to now work with speed. We need to think a lot about scale as well as scope. To do a lot more with the limited resources and to put more things out there. And then lastly, while he wrote about standards, he also talked a lot about skills in the interview he gave to your channel. So I think what's coming in the next 100 days between now and October should be very exciting, not just for newsrooms, but also for markets to digest and then discount them and hopefully start the next trajectory.
Manish, good morning to you and good afternoon from India, Neeraj here.
Yes, hi.
Just wondering, you've been on record now for a number of times talking about how India could be the classic bubble market of the next 10, 15 years, right? Does this election in any way change that belief? I know it probably wouldn't, and most most certainly wouldn't, but I'm still wanting to hear it from you.
Yeah, no, I do feel that we are setting ourselves up for that classic inflow of a gush of foreign money from overseas. So while the bond indices inclusion money has started already coming in, I think the equity flows have been slightly muted, hoping for a correction in the market. And you saw those kind of reactions even just after the exit poll and when the actual results came out and so on. But you saw the speed of response from the local investors, not really giving a break to the foreigners to buy India cheap. And my submission is that at some point, this economic miracle of India will reverse the trajectory of the rupee, and the rupee is going to strengthen dramatically. And at which point, the foreigners will realize that it's a game where this country will have falling rates, a stronger currency, and maintain its high rate of return on equity. And therefore, it's a story that you can't miss. And as we've also always said that there have been three Indias, the 2% Australians, the 18% Filipinos, and sort of the billion people who are still deprived and looking to come up in life. In the next 5 years, as the market starts discounting this, and it typically discounts front-ended, it's very likely people will start thinking that the 200 million people who are on two-wheelers are going to come into the 25 million class of four-wheeler owners and so on. And therefore, you're seeing that happening in, for example, in real estate and housing already today. That from the Prime Minister's level to put a Garib, Awas Yojana and his housing scheme for all, to the complete up end of the society where everyone's realized they need more space in their homes, it is something unprecedented which is going on. And I don't think this is a trend which is easily reversible. So yeah, to summarize, I do feel we're going to set ourselves up for bubble type of valuations. I don't love it because it means we underperform then after that bubble is formed. So I hope from time to time the regulators and the ministers can sort of keep cooling the market a bit. But having said that, I think the wall of money headed our way is going to be very, very large.
Actually, that was going to be my next question, Manish. I heard you say at the start of this conversation that you've been in Europe for a while. Were foreigners waiting for the political outcome to be out of the way, foreign money that is, and now that it is done, does it come too soon, or is it difficult to kind of call when does foreign money make its way into India?
So, Neeraj, there are 2-3 things. One, obviously, if you're an active fund manager, you don't want to take event risk and then be answerable to your investment committees. So the active money managers were all obviously waiting, a bit for this event to get out of the way. Also, once this coalition settles down and people are breathing easier overseas, but they haven't seen the way we've seen it for the last 30 odd years in India. That this is actually a very, very strong coalition with barely 30 seats, and I would expect over the next 3 or 4 months the numbers will only get added rather than reduced. So the active management side, I think money flows will come. The bigger money, though, nowadays comes from the passive sides and the sovereigns who have to really do allocations. And as we start moving up in the indices as well, it's almost inevitable that it becomes in a way valuation agnostic at that point. And those are the conditions which cause bubbles. Because like you're seeing in the US now, all the funds keep chasing NVIDIA as it keeps rising because the weightage keeps going up. And the performance keeps coming, and therefore all the momentum trades and all the algorithmic trades all start chasing that. And I suspect something like that is sort of slated to happen here as well.
In which spaces, Manish, as we look at the 100-day agenda, you talked about how this is something that even the street would want to know before it digests it. In what direction do you see that push? We have some clues from what the Prime Minister has been saying so far, talking about green energy, EVs, made in India defense, etc. And these have already been favorites. Do you see more of the same?
I think it's a continuation, Taman. I don't think it's a trend-changing election in that sense. And it is a rotational bull market. So as each sector takes leadership and something underperforms for a while, then something else comes up. Because look, on a valuation basis, I don't think anyone in my community can come and make a case for any sector really saying that it's cheap. So it's really a belief in what you now call the terminal value of India, that it's increasing at a faster and faster pace as we go along. And as you go from literally being the 5th largest to the 3rd largest economy, the rate of change is what markets typically reward. And I'm sitting, of course, in a continent which Larry Summers famously called a museum when he called Japan as a hospital. So if these demographic changes in the Western world and the developed world are not in their favor, this wall of money is looking for somewhere where you can deploy incremental capital to make incremental return on that capital. And the case for India, therefore, remains very, very strong. And as you said, if you get all these productivity enhancing things and the scope enhancing things, which the Prime Minister has very well articulated, the scale, of course, exists in India, and it's a question of getting this per capita numbers up. And I suspect with the results, one thing which will happen is you will see a lot more push to the bottom of the pyramid for the billion people who are sitting out in our villages and our farms who have not been getting their jobs, to how to accelerate that, because this demographic dividend is not there forever. So I do think the next 5 years is exciting times for infrastructure development, for people who are going to go and benefit from how these billion people translate from, say, bicycle owners to two-wheeler owners, and then as you would expect, the two-wheeler owners to then come into the car category. So whether it's discretionary, consumer discretionary type things, home improvement things, infrastructure, of course, is an obvious. And my perennial favorite is always banking and financials, because all the streams of income and expenditure eventually flow through the banking and financial space. And asset managers you've seen are already benefiting from those kind of flows as well.
In the banking and financial space, are you partial towards the established private banks? Do you think public sector banks still have a long way to go? The housing finance companies, anything more that you can add to your perennial favorite?
Tamanna, it's in this sort of market where people looking for relative valuations now, financials look very, very cheap. And if you had asked me 2 years ago, do I think a public sector company can sell at a 40p multiple, I would have not agreed with it. Although I own a lot of public sector stocks and I benefited from them, I never imagined we would see 40, 45 multiples for public sector companies, whether it was in defense or allied areas. And therefore, this old paradigm we have that PSU banks can only trade at 1.2 time book is, I think, also going to get blasted out of the water. And at some point, you'll see them trading very high as well. The same way, we couldn't expect, before Mr. Bakshi took over in ICICI Bank or Amitabh took over in Axis Bank, they were kind of dismissed as corporate banks and therefore their lending was not great and so on. And you've seen the transformation in all of these. So again, like I said, it's a rotational market where 5 years ago, the HDFCs and Kotaks were the favorites. And it's swung completely on the other side now to ICICI, Axis, SBI. And then, of course, you can go down to Canara and the others as well. And there's a lot of room to run in a lot of these names.
Manish, one more question, and for at least last question from my end. In a world of expensive PSU valuations, there also exists egregious private sector capex beneficiary valuations as well. Just trying to understand, for how long can the rubber band stay stretched? Or you reckon that can continue?
So, Neeraj, if my operating assumption is that we get into bubble, I'm not going to argue with how high these get. I may not need to participate, and I'm very fortunate that I don't have to manage third-party money. Just, we invest for ourselves. And we may not participate in, some things which don't make sense to us. But as an individual who's investing, there are always opportunities in the market. And I'm not constrained by, I must not have 50 stocks or I must not have more than X percentage in a particular sector and so on. But yeah, I mean, it's a brilliant market for a stock picker across the strata. So while mid cap, small cap do look expensive, there are still opportunities there. And even in the large caps, like I said, if the leading banks of the country still look fairly valued, there's enough room to run over there. And eventually, look, we're all slaves to earnings. And that's the weight of profit, which is what's going to eventually determine where we go. In the interim, if you get a bubble, and if you're fortunate enough to participate and also exit at the right time, because you don't want to be left holding the baby once the bubble bursts. So first, let's see how much this builds up to. There's no case for selling India. There's no case for anything to decline right now. It does look like clear blue skies, the typical worries on oil and geopolitics and domestic politics and interest rates. look fairly benign. There are tailwinds behind the Indian economy. We have been managed well. There's no reason to believe we won't be. The balance sheets of the government, the corporate sector, the households all seem to be in good shape. So trends are all in the right direction, and trends won't just reverse unless they get pulled to extremes at the larger market cap end of the market, because that's when real big money will be made or lost. So I think we're still heading upwards in that trajectory.
Got it. Viewers, keep in mind, there are some videos that Manish Chokhani has done with us as well, wherein he talks about if you can't time the top, then do some bit of technical analysis, wait for the wave to come off, and all of that. You might want to read that if you think of egregious valuations. Sorry, Manish?
Neeraj, now with the algorithms, I think they don't give you that time as well. So you can't size up quickly on the way up and you can't exit quickly on the way down. So the algos get much faster now.
Yeah, just at least my final question, Manish, and that is, we speak about this, right? Domestic economy doing so well. What about exporting themes? Each of those have some issue. Chemicals have an issue for a while now. IT is just starting to look, for lack of a better word, very, very passive in the recent past because of the AI challenge or what have you, and the banking issues. So, and you speak about the rupee strengthening as well. Just trying to think, what about export-oriented themes?
Look, again, I'm sitting in a country which has the most expensive currency in the world, and they haven't stopped exporting. Even you'll buy their chocolates because they're just so good. So we need to transition from being cheap processors for the world to producing goods for the world. And I'm enthused by the work being done by people at iSpirit, where we say we will set the standards and we will own the kernel on which the platforms and then the products are made. And if indeed the Prime Minister is thinking in that way, you've seen how they backed the 5G, creation of the 5G network with Tejas and others of their ilk. That sort of thinking, when it comes in and permeates, that's when we lift off on our exports. We won't become a large number 3 economy and then a number 2 economy and then a number 1 economy on the back of just being backroom boys for the rest of the world, whether it's with global capability centers or IT services, which are all fantastic and required. But we have to go up the value chain to the next level. Same thing applies to chemicals. Same thing applies to pharmaceuticals. Same thing applies to engineering goods and services. Same thing applies to automobiles. But I think a country will not become third largest unless you start seeing Indian product out there in the world. And you're probably then driving an Indian car or wearing an Indian watch or wearing Indian garments or whatever. And also the whole gamut of services and tourism, which I think is really a big deal in the country. And that's one of the things also which the Prime Minister has been stressing on, to get your religious tourism and your adventure tourism and all of that happening domestically in India and build the infrastructure for that. We will attract masses of people coming from overseas as well.
Manish, this is really, really the final question. I know we've been saying it for a while, but I'm going to just do a follow-up of what you said earlier, which is about lifting the bottom of the pyramid and how that becomes crucial. I would say it's, in a sense, something that politically we will see focus on. The first 2 announcements from the government, even before the portfolios are out, have been focused on this segment. What, in your view, can be done so as to not displace the fiscal deficit balance, not seem like we're veering towards populism, but truly make a change?
I don't think this government, by its nature and instinct, is a populist government.
Yes.
Having said that, remember, Chandrababu Naidu also had lost his election in his earlier term because of his excessive focus on urbanization and so on. But having said that, I think the solution for the agri-distress is not to fix agriculture, because there's only that much produce and only that much output and productivity you can get per acre of land. The solution is what has been repeated across the world, is to urbanize at a faster rate and get people off the farm. And in the farm, you have to do a lot more value addition with food processing and packaging and then productizing and so on. I think these 2 trends are well understood by the government. And therefore, I don't expect that you will see a slowdown in the urbanization rate of the country. But I do equally feel you will see a lot more stress on value-added agriculture to take place. And therefore, I'm still hopeful, although I know the rest of my brethren in the market don't believe the farm laws will get pushed through. I remain hopeful about that was something which would have unleashed the productivity of our farmer and allowed them to play to their benefit in terms of market-driven prices and so on. and it was stymied just by that agitation in Punjab and maybe parts of Western UP and so on. If that comes through, I think that's really going to be the solution for the farming distress. The other one, of course, was labor laws, which were already passed by Parliament, which have to now get enacted across different states. But these are the two big, things which have to be done from a voting populace perspective. And from the rest of the country, I think when he speaks of speed, is this administrative reform and judicial reform, which is kind of clogging up the wheels and preventing us from moving faster. Again, the way they digitized the IT system and got a lot more throughput going through faster. I do hope and believe something like that would come through for the rest of the administration, especially for the judiciary, where I believe some 60 or 62 million cases seem to be clogged up in our courts. And if you can use AI intelligently over there, and it won't happen overnight, but when we look back 5 years from now, the way we look back at what happened with GST, I would expect dramatic changes to be made over there as well.
Fantastic, Manish. Always a pleasure to speak with you. Thank you so much for joining us this afternoon. India time, we're waiting the portfolios, but I think that's going to be just one more leg of that story, which is pretty much set and clear as a direction for the markets. Thank you again for speaking with us.
All the best. Thanks.